What is up, everybody? My name is Brendan Ecker. Welcome to Michigan Real Estate Live, where we talk about the Michigan real estate market and everything you need to know for investing in Michigan real estate, or in Michigan, or in real estate all over the country. And that's what I do. I'm a real estate agent with eXp Realty, Best Life & Co. And at the end of the day, our goal is to hook you up and help you go through the process of buying your first home, buying a home, or just trying to figure out what's going on in real estate. Real estate's a fickle market today in 2026. A lot of unpredictable things going on. And so all we can really do is do our very best to understand where things are actually at. And so at the end of the day, I think it's going to be an interesting episode because I'm looking forward to really looking at what's new, what's most important in the market, and really what's going on. So again, be sure to leave your thoughts, like, share, comment, subscribe. Be sure to, again, share this because people need to know this. Not everybody's doing real estate content because they don't want you to know the truth. They don't want you to know that real estate's actually very doable. It's always a good time to invest in real estate, really. And so the longer you wait, the higher the prices will go. And as much as that's annoying, the mortgage rates are always going up. The interest rates are going up. Pretty unchanged as we've been seeing today in the markets, right? And so with that being said, you have to really take initiative and advantage of what this market is doing today. So again, be sure to like, share, comment, subscribe. Again, what are your thoughts on the real estate market? What are your thoughts on what's going on today with everything we're seeing happening? I think it's going to be quite interesting when we really see where the future is going. And ultimately, again, what do you think? So let's get right into it. Just wanted to check, make sure we're live on all these other platforms here. We should be. I think we're good to go. Good on Kick. We're good on Twitch. Good on YouTube. Rumble having some troubles, so again, we may not be streaming on Rumble today. That's okay. We'll post it live everywhere, and again on Facebook. You can also watch live on Facebook. Again, I'm just making sure that we are all good streaming from these platforms. I think we're pretty much good to go almost. Live streaming is kind of a technical thing. So again, we're streaming on Facebook, Twitch, YouTube, Kick, and pretty much everywhere. We'll be streaming in more places at a later date. But again, let's get right into it. If you want to work with me, Brendan Ecker, again, be sure to follow me or visit BrendanEckerRealty.com, where, again, we cover a lot of what's happening in the current markets. It's rather important that you know what's going on. So this is a good place to get in contact with me, eXp Realty. Fill out the form card here, or you can just book a 30-minute meeting with me right on the Calendly link that's right on the homepage. And again, got everything you need. Testimonials, Gold Shark Media AI for real estate agents like myself. If you need a CRM, I built that software just for you. And again, we also have page. The page is just for the buyers, pages for sellers, everything you could possibly need, right? Everything's pretty much here for you. Good place to go when you need a good realtor like Brendan Ecker. So again, this is where you want to go. And this is what we're going to do. We're going to hook you up with the entire transaction process. I also work with commercial real estate investors. So again, you want to buy a Starbucks, you want to go to an auction, you want to figure out how you can acquire a triple net property on, LoopNet. We're going to be covering that today. We're going to be covering the Zillow markets and some of the newest real estate that's happening. So again, this is where you can get in contact with me. If you want to get sponsored as an agent, if you just passed your real estate licensing exam, then go to BrendanEckerRealty.com, BrendanEcker Realty.com. And then just fill out this form, and we'll get you sponsored with eXp Realty under a broker. And again, my broker is pretty good. He's one of the most prominent in the state. And so again, we'll hook you up, and we'll get you started on your real estate career. And so with that being said, that's pretty much all I have. Let's get right into the news. Let's get right into what you need to know for the real estate market. So again, this is pretty much what's going on. The U.S. real estate market features home prices, soft sales volume, and mortgage rates covering near 6.5 to 6.9%. Median U.S. home prices reached an all-time high of $440,600, representing a modest of 1.8% increase year over year, according to the National Association of Realtors. As far as sales volume goes, existing home sales pulled back to a seasonably adjusted annual rate of 4.09 million units, constrained by long-term affordability hurdles and the lock-in effect, keeping prospective sellers put. Supply remains historically tight because roughly 70% of current mortgage holders have interest rates locked at 5% or lower. And according to the Michigan Market Trends, prices and sales in Michigan, the medium single-family home sale price sits approximately at $293,956, marking a 5.4% increase compared to last year. So the prices are going up. So that you need to get your money up, right? That's what they tell you. But ultimately, again, the idea is understanding what you really need to get into real estate. You need a good credit score, right? You need anything over a 580 credit score, I would say. Really, you need more. The higher your credit score, the better your chances are of getting good terms on a loan. Again, you can get a conventional loan, again, 30-year conventional loan, or you can always get that FHA loan at 3.5% down, which is also an option. Great option for investors or people who want to get into multifamily. That's also what I help with. My goal is to make sure that you know that. And again, you want to have equity in the home. You want to make sure you have a good cash supply. So again, I would say anywhere over $150,000 today to $200,000 is what you need. But you can probably squeeze into a single family residential anywhere from like 50 grand to 60 grand, I would say. And you can make it work. Again, that all depends on your credit score. And then of course you need 2 years employment history, or you need some college experience with a current job that matches that college experience. That'll pretty much get you into a home today. That's really what you need. That's the stuff people need to focus on because those are like the requirements. So again, looking at the mortgage lenders with the best rates on August 3rd, 2026, this is kind of what we're looking at according to Yahoo Finance. Here are 10 mortgage lenders with the best interest rates this week, as determined by our survey of the lowest mortgage rates on a 30-year fixed-rate conventional loan. The following numbers are each lender's annual percentage rate, or the APR. So again, your top 10 here right now in 2026 is 6.4% with the Navy Federal Credit Union, Flagstar Bank at 6.46%, Better with 6.51%, Penn Fed Credit Union at 6.54% interest rates, Chase Home Loans at 6.57% interest rates, City Mortgage at 6.61% interest rates, Truist at 6.77% interest rates. Then you have Wells Fargo at 6.7% interest rates, Third Federal 6.79% interest rates, and Citizens Bank at 6.95% interest rates. So again, higher fees don't mean lower rates. Most borrowers, 56% of those borrowers, don't shop mortgage rates, settling for the first interest rate quote they receive, according to LendingTree. As you can see from our weekly survey, there's more than half a point spread in the APRs offered with the top 10 lenders and an even greater difference in the fees charged. See as the points table below. Of the 16 national lenders surveyed on August 3rd, rate PNC Bank, Fifth Third Bank, Bank of America, and Rocket Mortgage did not rank among the top 10 lenders sorted by annual percentage rates. U.S. banks did not pose a recent rate update. An APR difference of 0.735 percentage points separated the top lender, Navy Federal, from the bottom ranked Rocket Mortgage. So that's kind of what we're looking at. Again, these are the top 10, mortgage lenders essentially to get the best on interest rates. And so that's what we're looking at. If you're a real estate investor, these things are important. So this kind of gives you a layout. So again, this is Yahoo Finance. If you want to check that out, go there. You can kind of see where you stand. Just plug in your info, your purchase, your refinance info, zip code, wherever you live in. And again, the loan amount that you need, 20% down, all that stuff. 30-year fixed mortgage, or if it's a 20-year, a 15-year fixed, 10-year, a 3-in-1 arm, or a 3-in-6 arm. And again, on so forth. So again, and then you also put in your credit score, you'll be able to get that info. So most people are sitting around these averages right here that are already listed. This is just basically what you're going to see across the board. So again, how's your real estate situation today in the United States? How are you living in Michigan? Because this is where we're at, right? But this is what you need to know. Real Estate Analytica launches AI workforce for real estate. That's some other big news in the real estate economy today. The company also introduced a platform for identifying recruitment and acquisition opportunities. Real Analytica has launched Atlas Agents, an AI-powered workforce that automates real estate operations, including lead follow-up, transaction management, marketing, and data analysis. The platform connects over 30 integrations, CRM, MLS, email, and tax data, and includes real estate-specific workflows, so users don't need to build prompts. Brokerages can create custom workflows aligned with their brand. Recruiting platform helps identify and engage productive agents and evaluate acquisitions. Real Estate Analytica has launched Atlas Agents, an artificial intelligence-powered workforce designed to help real estate brokerages and agents automate day-to-day operations. The launch builds the company's early growth in New England and expands its platforms with AI agents that can handle lead follow-up, transaction management, marketing, data analysis, and other recurring business tasks. Atlas Agents is designed to centralize real estate operations by connecting CRM, MLS, email, tax data, marketing, recruiting, analytics, e-signature, and transaction management tools with a single platform. The system supports more than 30 integrations and includes real estate-specific workflows so users don't have to build prompts or explain industry processes. The AI agents can follow up with leads, analyze listings and market data, monitor transactions, identify business opportunities, and completed approved workflows automatically, including recurring and multi-step tasks. So again, this is AI. The future of AI, the world of AI, the Terminator 2 future, as you might want to call it. That's kind of where we're going into. But let's turn it into a real estate game, right? Let's turn it into something positive. And that's what I say. Brokerages can also create workflows aligned with their own operating procedures and brand standards. So again, EXP, pay attention, right? According to the company, the platform is intended to handle administrative work while leaving client relationships, negotiations, and final decision-making in the hands of real estate professionals. Alongside Atlas Agents, Real Estate Analytica introduced a recruiting platform that enables brokerages and brokerage owners and managers to identify, engage, and recruit productive agents while also evaluating potential office acquisition opportunities. The company said their platform is designed to help brokerages expand more strategically by combining recruiting tools with business intelligence. Atlas Agents officially launches August 5th. So again, just 2 days from now. At launch, customers will have access to AI agents for lead follow-up, client management, listing analysis, transaction management, marketing, and custom workflow automation. This article was generated using HouseWire automation and reviewed by a HousingWire editor before publication. So, Real Analytica, launching AI. Everything's going to be done with AI. And if you go to my other channels, Brendan Ecker or Ecker Geopolitics, where I talk about some of these more broad topics, where I cover really what's happening in the world, in the news, you'll hear a lot of AI talk. I cover the AI markets. I cover what's new with Sam Altman, Elon Musk. I cover what's new with Donald Trump and all of his moves on Truth Social, his new API he just released where it could cost over $100,000 a month basically just to get Trump's Truth Social post so you can make money on that as an institution, right? So you got to think like the wealthy and the 1%. If you want to be the 1%, you got to beat the 1%. You got to think like them, okay? And as much as people despise this kind of world we're living in with AI data centers, it's like you have to adapt and endure because like they always say, we're not putting the genie back in the bottle when it comes to AI. So when I look at stuff like this with Real Analytica launches AI workforce for real estate, you know, I just kind of think, well, you know, this is the future we're going into. This is what people need to get, used to. People need to adapt to what's coming tomorrow. And so that's what we're looking at. What are you doing to keep up with AI is the real question. Are you keeping up with it? Are you using ChatGPT? Are you using Claude? Are you using Perplexity? Are you using Anthropic and all these different platforms? Are you using Grok? Grok is amazing. It's a fact-checking platform right on X and basically an LLM just like ChatGPT. So it allows you to basically have these real engaging conversations, but you're also getting real-time data and predictive kind of analysis. So it's pretty amazing stuff. You got to be paying attention to what's happening with AI. You got to adapt to it. If you're a real estate agent, if you're a realtor, you got to adapt to AI. You should be using all of these platforms to help you out. If you're an investor, you need to be using AI. And again, Real Analytica is perfect because it's going to help you find and connect you with those best kind of real estate agents that are highly qualified, pretty good on the records, right? Me, I'm a newer real estate agent. I'm 27 years old. And, I've helped close a couple multi-million-dollar deals, so that's pretty cool. But at the end of the day, I was really helping my mentors and doing that kind of thing. But again, I'm looking to work with you and anybody, residential, commercial, that's kind of my game, right? So again, BrendanEckerRealty.com if you do want to work with me. And again, I've built my own AI, Gold Shark Media AI. And again, we'll just go to that real quick. Gold Shark Media. And this is just my AI I built. Quick little plug. So this is the software that I built for real estate agents. Again, 7-day free trial you get out of this. You get a free demo. This is for roofers, HVAC, med spas, legal services, other real estate agents, home services, e-commerce, B2B agencies, marketing agencies. And again, it has pretty much all features, right? Allows you to really automate your Google reviews. We already have a ton of different testimonials ourselves, all 5 stars. People like it. And everybody we've worked with has had positive experience with it. Right. So again, this is a platform that's going to allow you to really automate your business, run it in one place, kind of like the Real Analytica AI that we were just going over. This is very similar. This is going to allow you to host your entire business into one place and you can white label it. So that's kind of what our elite plan offers. But this is kind of what we're looking at. And then the annual plans, you're kind of looking at that situation. So again, from $799 a year to $5,000 a year. And then with the monthly, you have $79 a month, up to $197 a month, up to $497 a month. But again, this software is powerful. I use it myself for my own CRM. I use my own software that I built here. and it's very powerful. Very powerful. And again, it covers pretty much any business industry, small business industry that you can think of. We have our FAQ here. You want to learn more about it. It's got everything you need to know there. So it's great for entrepreneurs and business owners really looking to scale their business and keep everything in one centralized space. So that's what our software does. And again, it's going to automate those Google reviews for you, all that kind of stuff. It's very powerful. Speed to lead, AI summaries, Kanban pipeline, prospecting workspace, follow-up tasks, review capture, ROI reporting, mislead alerts, and admin controls has all of it. So very good stuff, and so I highly recommend it. And again, you get a 7-day free trial, so test it out, see how you like it. You know, leave your thoughts, leave your review. And if you don't love it, then we'll make the changes customized for you alone. So that's kind of my AI. That's my AI plug after everything we just looked at. And again, what do you think? What do you think about where things are going? What do you think about where this entire market is heading? So again, now I want to look at some actual real estate. Let's actually look at what's going on in the real estate markets today. I think it's pretty huge. So again, when we look at all of this, U.S. real estate market, okay, we covered that. Yeah, so this is kind of what's going on in Michigan real estate, where this is the area that I really focus in. So as you can see, I circled it here on Zillow. Essentially, this is focusing on the thumb of Michigan. And again, a lot of your prices are going to be anywhere generally around this $269,972. So right now, we're 4.2% up in 1 year, according to Zillow. And again, this is just the Michigan housing market. But again, we're looking at basically real estate in the state of Michigan when we see all of this, right? And so what I'm saying here is you got to really focus on what's available. So 389,900 in, again, Ortonville, Michigan. These are all different kind of properties that are available to you. Again, I would consider this more of a residential property. A lot of these prices today are, you got to be thinking like a multifamily investor, right? Or if not multifamily, a single residential investor. Because how can you make cash flow in 2026? And, you know, real estate's not easy to do it anymore. It's not easy like it was 12 years ago. I don't care what any real estate agent tells you. It's not. It's not going to be so easy to make cash flow with real estate. But if you do it right, and if you're thinking smart, right, you're going to find the best deals, and, you know, you're going to lowball offers when you need to in order to really find that sweet spot when it comes to a negotiation, something that makes sense between both parties. Obviously, you don't want to price gouge anybody or anything like that, but this is kind of what we're looking at. So again, this is what you'll see in Michigan when you're looking for real estate. This is $420,000. Some of these prices, what do you think about them? Are they overpriced? Because a lot of these are going to be redone, fully remodeled. You're going to see a lot of stuff that's pretty much already done, right? Full kitchens, full baths, redone, well done Michigan basements, all that kind of stuff. Everybody wants land today in 2026. It's kind of what they're looking at. This is in Westland, Michigan, $380,000. So again, we're just looking at a few different properties that you'll see on Zillow if you were to look in Michigan real estate today. And so as a Michigan real estate agent, my job is to show you what you'll see and kind of show you what's out there. So again, some of these prices. So again, people, what do you think about the pricing? What do you think about these homes and what they're priced at? A lot of people would say that they're overvalued. Well, I say it depends on the buyer. It depends on what's comfortable in your financial situation. This is why, you know, you need a good realtor who's going to be able to ask those questions and figure out where you're at in your financial situation, right? So everybody's got a different preference, but this is about $380,000 in Michigan today. And again, 4 beds, 4 baths, 2,930 square feet. And so again, that's just one of the different listings that you're going to see. This is $435,000. So again, this is located in West Bloomfield, Michigan. So that's kind of where we're focusing on. Again, you have your fireplace. You got a nice bedroom. Every wall's fully painted, it looks like. Not too many images here for that. So again, we still have this luxury property in Michigan at $7.89 million. So I did a live stream a few months ago covering this. I took a break because I was focusing on geopolitical analysis and things that I was doing to make some money in that off time. Because again, I do OSA analysis and I focus on a lot of that. Working as law enforcement and whatnot. It's kind of partially what I do as well. But I have had my eyes on this property. $7.985 million. This is 5140 Turtle Point Drive, Ann Arbor, Michigan. It has a freaking basketball court. That's pretty awesome. I like basketball. And you have bison. You got your nice little bison, nice little bison mount. Very Michigan vibes, right? Very classical kind of vibes. So again, that's just some of the luxury property you'll see here in Michigan. We got many more too. There's many more, but this is just in eastern Michigan the real estate that we're looking at in the Best Life & Co. area, really where I kind of focus. I focus on Metamora, Elamont, Romeo. I focused on basically Macomb County, Lapeer County, Oakland County. Those are like my big counties that I really centralize on for my target audience, because that's kind of where I'm located. So again, $870,000 in Grosse Pointe, Michigan. So again, people are looking at Grosse Pointe properties, Lakeshore properties. Metro Detroit has a lot of positive reviews. Again, so you got a little bit of a Florida vibe here. Though you're living in Michigan, you got that little bit of Florida vibe. Again, you're looking at Grosse Pointe, Michigan here. So again, bedrooms fully painted and pretty nice overall, pretty nice. Again, estimated $6,592 a month rent if you were to rent out. 4 beds, 4 baths, 4,377 square feet. And so this is kind of where we're looking at. So again, a lot of people are interested in these properties. And again, private resort in the heart of Grosse Pointe Woods, perfectly blending luxury, comfort, and exceptional indoor living. This beautiful updated 4-bed, 3.1 bath offers incredible lifestyle for Michigan summers and winters. I would agree with that. So again, another average, more in an average home that you'll see here in Michigan, $650,000, but I think it's pretty beautiful when I look at what we're kind of looking at in the markets today. And so you got a nice open kitchen, nice painted walls, nice windows, flat screens in the corner of the bedroom, nice paintings. I mean, beautiful stuff, right? Got land, nice trees to really irrigate that privacy for you. Nice long driveway. And I think that's what it's all about, ultimately. That's what we need to focus on. $869,900. This is in Plymouth, Michigan. So again, this is a 4-bed, 3-bath at 4,160 square feet, Concord Drive. Pretty nice. Again, these are just some of the properties that people have been asking about. People have been liking these. I've been in contact with some of these realtors. I know some of these realtors myself. And so, again, I'm looking to help people find that dream property. That's what it's really all about. Okay. So as you can see, we got a lot of different options here. When you're looking at the Michigan real estate markets, there's tons that you can find. You got properties right on the shore here, right on a lake. Again, this is 835,000 Bay Point Drive in Oxford. So again, nice and renovated, fireplace, got a panoramic window kind of style. Hot tub in the backyard. You're right on a little lake beach here. Very Michigan vibes. American flag blowing in the pictures. Nice little boat. I don't know if the boat comes with the sail, right? But we love Michigan real estate. And so ultimately, that's kind of what we're looking at. $925,000 in Northville, Michigan. If you're looking for a more suburban feel, this is kind of what you're getting. So again, a lot of people have been asking about these kind of properties. A lot of people are digging the suburban lifestyle kind of feel. A lot of people are into it, and I wouldn't disagree. I don't want to get copyright. But yep, this is pretty much what you're looking at when it comes to, again, $925,000, 52131 Pierce Drive in Northville, Michigan. Beautiful chandeliers, beautiful floors, hardwood floors. You got nice raised ceilings, beautiful chandeliers, luxurious vibes. You got nice suburban vibes. And again, you have, just nice bathrooms, nice backyard. That's what it's all about. And I wouldn't mind it myself. The question is, do you love your neighbors? So again, you have your flat screen TV, open kitchen. So again, this is really nice vibes for anybody looking for that kind of life. So this is kind of what we're looking at for the most part when it comes to your Michigan real estate. Again, this property is in West Bloomfield, Michigan. Another one here. This is also for sale. 4133 Shorecrest Drive. 4 beds, 3 baths, 3,671 square feet. Single-family residence built in 1973. 0.38 acre lot. $621,300 Zestimate. $163 per square foot. And again, when we're looking at it, it's already got 334 saves, 3,478 views, likely to sell faster than 99% nearby. So that's kind of huge. It's only been on Zillow for 4 days. But this is, again, kind of what I'd be willing to help you acquire. If you're looking to acquire real estate, then this is where you want to focus on. West Bloomfield is a beautiful location everybody's looking at. I really like this myself. Very luxury vibe. A little bit of a Hawaii, LA vibe, maybe. Again, you got nice new kitchens here, nice new hardwood floors. Good privacy fences in that yard there. So very nice. Little fireplace. Luxury furniture here. So everybody loves a little bit of that. Got your own little office. Who doesn't love that? Washroom. Again, you also have your upstairs, your second floor here with the bedrooms for the kids and for the family. Kind of nice. Again, nice bathroom. Everybody likes a nice bathroom. Carpet, a little bit of carpet there. It's like a working sink. Everything works great. Huge closet for the females who like to shop. All the Chanel ladies out there, you like to stuff your closets with expensive stuff. Then there you go. This is kind of your hookup. This is where you want to be. And again, you got a nice bathroom. So this is kind of what we're looking at. Beautiful basement. Everything nice and done. Even the ceiling's painted here. Wow. So it's pretty nice. It's a very modern kind of vibe. I don't know if all the furniture comes as is, but this is kind of what people are talking about. There's a little bit of the groundwork, the floor plans here. And that kind of gives you an outlook of what you're looking at. So that's West Bloomfield. Again, if you want to contact me for that, again, be sure to message me. Fill out a contact form or DM home in the comments section. But this is what people are really interested in today, is that kind of modernized vibe, that kind of 2026 living into the future vibe. If you want more of that, this is over 1.05 million. So again, 1683 Delta Drive, Troy, Michigan. 5 beds, 4 baths, 3,620 square feet. Single family, built in 2024, 0.37 acres, $290 per square foot, and 3 garage spaces. So pretty nice. Huge kitchen. So this is your modernized kind of vibe. You got nice marble tables here. Nice white painted cabinets. Again, the outside, you have that nice brick kind of feel. There's your, again, 3 garages. So very nice. Very nice. So again, this is that open kitchen, and that's kind of what we're looking at for that. So people are into it. People want the property. People want the land. People want what's new, right? A lot of renovations happening in Michigan when we're looking at some of these bigger properties. Again, this is in Troy, 2038 Haverford Drive. Geez, sorry there. 4 beds, 4 baths, 4,175 square feet. Again, single-family residence built in only 1995, so still relatively new. $46 a month HOA fee, $278 a square foot, and 1.115 million estimate. So again, pretty nice. So this is kind of what we're looking at. Nice hardwood door, raised ceilings. That's nice. Nice living room. Everything very modern. Walls newly painted. Fireplace. Open kitchen here for the most part. Nice countertops, nice marble countertops. So it's kind of a good vibe if you're into that modernized feel. So again, I can help you acquire that property if you're looking to work with me. DM home in the comments section, or you can email me at Brendan Ecker at Proton, Brendan Ecker Realty at protonmail.com. You can email me at eckerrealty@proton.me. Any of these emails would work. Or you could just go to the website, BrendanEckerRealty.com, and just fill out the contact form, and I'll get your information there. So again, this is kind of what people are looking at in Troy, Michigan today. And this is kind of what people are enjoying. So this is what people want. Ultimately, you have that basement, a finished basement, so lots of space if you're looking to put your home gym down there. I like to work out. I'm a weight room guy myself. I'm a big powerlifting kind of guy. I like to have, a nice basement with a nice home gym. And then again, some people like to put all their wood shop stuff in the basement or whatever, and they like to put their storage, hunting stuff, whatever you got, put it in there. And there you go. So again, more of a suburban life when you're looking at this property. But again, that's 2038 Haverford Drive in Troy, Michigan. 1.16 mil. So not too shabby, not too shabby. So ultimately, that's kind of what we're looking at. So again, a lot more options here. You can take a look at any of these. Again, you need an apartment. You need a leasing agent. I'll help you out with that. Again, you have 34432 Jefferson Avenue, apartment 6. That's also up on Zillow here. So some of you might be looking for an apartment. Maybe you're a younger college kid. You're looking to find some kind of life in college. You want to live somewhere. You want to live in Michigan for a while, not forever. Keep it temporary. Or maybe you're just looking to settle down, but you want a nice apartment. You want something luxury. You want a nice luxury vibe, nice luxury feel. Got that ocean, or not ocean, you got that Great Lakes view there. And so, again, pretty nice. So, again, luxury lakefront living at its finest. Welcome to the exceptional fourth floor residence at 400 on the lake, offering breathtaking panoramic views of Lake St. Clair. This beautifully updated one-level condominium features an open floor plan with a stunning new kitchen, showcasing marble countertops, stainless steel appliances, recessed lighting, and a spacious eating area that opens to the formal dining room and great room. The enclosed lakeside balcony with wet bar is the perfect place to entertain and enjoy spectacular lake views. Private primary suite offers direct balcony access, abundant closed space, and an updated and suite bath. So again, very nice if you're looking to really see what you can get out of an apartment. Want to get an apartment in 2026? It's not the worst idea with the prices currently on real estate. A little bit of we're in a little bit of a stagnant market, so you're always going to see some strange stuff happening with those, right? So again, Rochester Hills, another area where I like to focus on with clients. A lot of people are looking for real estate in Michigan in Rochester Hills. I had one out-of-state investor from New York City, and she wanted to look at properties in Rochester Hills. That was kind of her idea. She was a 1031 investor looking for a 1031 tax-deferred property, and that's kind of what she wanted. Right, she wanted anything in Rochester Hills, Metro Detroit area. That's huge right now, and that's a big area that people want. So again, this is another nice property, $695,000, 4 beds, 4 baths, 4,846 square feet. If this made sense for you, again, DM home in the comments section. I think this has a nice modernistic vibe, a little LA vibe in there, a little New York City vibe. And again, you got some nice privacy. You got some nice stone fireplace there, marble countertops. Who doesn't love that? Nice lighting in the place. Nice new paint. So everything looks pretty new. Nice hardwood floors. Everything looks pretty neat, new, modernized, renovated. So you don't have to do a lot of work to it. You got your washer and laundry room. You have carpeted stairs. That's important. Nice railings, polished railings, nice stained railings. Who doesn't like that? Again, nice expensive beds. Again, I don't know if this is as is in the property, but if it is, who doesn't love that? So again, nice balcony views, nice bedroom, master bedroom here, it looks like. Again, balcony view, got some nice trees. And again, you got, looks like a walk-in shower here. Nice tile floors. Big closet for the women out there. Or the men, I guess. And then you got your bunk beds. I don't know if that's as is with the property. But again, you got everything's carpeted. This is good for the kids. And again, you got a nice little music room here. So everybody loves a good music room. So whoever owned this house was obviously a musician of some sort. But again, who's not interested in that? So again, everybody kind of wants something like this when it comes to the current real estate market, what people want, what people are looking at. This tends to be those properties that people are eyeballing. So again, if you're interested in this property, be sure to contact me. Ooh, I love this. You got your basement. It looks like this is the basement at least. And it's a nice weight room section. You got the dumbbells. You got the pull-up bars. Again, you got all the Bowflex, all that good stuff. And then you got your you got your little doomsday prepping room here. All your woodcraft, anything that you're doing there. Again, your water heater. Got a nice garage, lots of space. Looks to be nice and clean. Everything looks to be renovated. So that's definitely a plus when it comes to a house, believe me. I've seen how disastrous a messy garage can be. And not just messy. I'm talking about like messy as in like damaged walls, damaged ceilings, all that kind of stuff. So, and they even have a tennis court in the back here. So again, that can always be renovated as well. Looks like it kind of turns into a basketball court as well. So that's cool. I'd be interested in that. Just give it a nice repaint. A nice pool in the back, a nice little yard to mow, not too big, not too small, and a nice space to do some dining and living in the on the nice summer nights, So again, this is right in a suburban neighborhood, right in a roundabout kind of area. So again, everybody kind of is usually inquiring about that kind of lifestyle. So again, what do you think? Rochester Hills, again, $695K. 3313 Salem Court, Rochester Hills, Michigan, 48306 zip code, 3,096 square feet. So if you're interested in that, be sure to contact me, and we'll get you started, get you going with the process. So that's pretty much it when it comes to looking at what's new in the Michigan real estate market. We'll look at some more properties tomorrow, but want to get going and moving on with what's next in our kind of search here. Again, now I wanted to focus on luxury properties and what's new in Michigan, just luxury. So if you didn't know what a luxury property is anything that's $750,000 or more, right, when it comes to that sale price. And so that's kind of where we consider a property luxury here in Michigan as realtors. And so this is kind of everything that's over the market for for $750,000. So this property is $1.45 million. So again, this is located in 3667 Ridge Road in Mackinac Island. It's just on Mackinac Island. Very nice and beautiful in Mackinac Island. So very interesting. Again, I was just here, so I find that to be rather interesting myself. But this is, when you're on Mackinac Island, you're going to see all sorts of properties like this. You're going to see a ton of properties that are old-fashioned, owned by a lot of bloodlines of Army veterans and things like that. You have some rich people who actually own property there on Mackinac Island. Beautiful place, beautiful island, and again, nice prices for everything as well for what you're going to get out of it. Again, you got a nice, beautiful view of the Mackinac Bridge, if you can notice that in the photo. Got a nice little space here in the backyard. Got a nice little shack here. Put all your stuff. Little gardening area. So again, that's what I thought was really cool. I was just on Mackinac Island like literally a week ago. It was beautiful. Beautiful place to live. Again, you'll have to take the ferry there, so that's nice. So if you want to contact me, you want to get in contact, you want to inquire about this property, again, let's talk. I'll take another trip up to Mackinac Island. It was pretty nice there. So you got a nice open kitchen here for the most part. And again, you got a nice window space, dining room, very old-fashioned kind of home, very vintage, I would say. Nice colonial kind of vibes. But when you look at that, pretty cool. Again, you almost have like a panoramic view nearly of that entire Mackinac Bridge. So that's pretty awesome. And again, this is the living space here, living room. You got a nice stone fireplace. So again, this is what you're going to see at Mackinac Island. This is just one of the properties that you'll see. But this is selling right now, again, for $1.45 million. Estimated $9,930 a month. 6 beds, 5.5 baths, 4,138 square feet, 1 acre lot. 2007 was when this home was built. So it's actually newer than what it looks like. And again, I actually think there's a lot of work you can do on this house still. There's still a lot of renovations you can always do. And there's just a lot of potential, I would say. You even got this interesting little crook here. Little storage space. Little attic space. Little room for the kids. Again, there's that attic space, that little secret room entry maybe. Pretty cool. Again, nice little living space if you have children and if you have little ones running around being crazy, doing their thing. And then you have your attic here. Go back to that for a second. You got a nice attic space here. And that's pretty renovated attic, actually. So not bad. Bathroom looks pretty nice. So again, this is Mackinac Island. So Mackinac Island, again, I thought it was beautiful there. I thought it was very nice. I liked the ferry. It was pretty cool. About an 18-minute ride from the ferry from the nearest city to Mackinac Island. About an 18-minute ferry ride. So pretty cool. Overall, lots of people in Mackinac Island. It is a tourist area, but at the end of the day, I mean, it's a tourist area for a reason. It's very nice. Got lots of nice little places to go. Very horse and buggy. You got lots of horse and buggies going around. Lots of people biking all the time. So again, your house is always going to be gawked at and looked at and kind of praised and admired by the masses. So who doesn't enjoy that? Again, bathrooms here for you. And then again, he even has a little weight room. So very powerful stuff. So again, you want to get in contact with me about acquiring this property. Again, it's $1.45 million. That doesn't mean you got to pay the whole $1.45 million. All of my investors know that already. Little down payment, 3.5%, FHA loan, and boom, it wouldn't really take you that much, right? So again, nice living in Mackinac Island. Nice sunsets, very Michigan vibes. So if you're into Michigan real estate, this is where you want to be. This is where you want to go. So again, as we look at some of these other properties, again, we have more properties here in Mackinac Island. We got one more. We'll look at this real quick. $995,000. Again, Very nice view. It takes you right out to the lake. It's very interesting. So as you look at these other properties, very nice. You got a nice open space, living area here. Old-fashioned, again, very much like the last property we just looked at. Again, this is also on Mackinac Island for $995,000, just over that luxury price of $750,000. Nice open kitchen space, hardwood floors, painted countertops, or marble countertops, and then painted cabinets. Nice new paint on the walls. Again, you can always change that paint if you don't like it. But again, very, very cool and very upgraded, I would say. And lots you could do with it. Still lots of potential, right? We got stairs here that I would do stuff on that. I'd make some renovations on the stairs if I was investing in that property. Very nice. So again, Mackinac Island, ladies and gentlemen. So when you go to Mackinac Island, you're going to get that old-fashioned 1800s feel, right? That vibe of the Brits and the Americans basically fighting over that land at Fort Mackinac. You'll be right near Fort Mackinac. It's right there on the island. As soon as you get there, big tourist location, very beautiful there too. And see that you can learn the whole story about the Americans versus the Brits taking on all of this, fight to keep this land and how the Americans barely secured it. So very cool stuff. So again, that's Mackinac Island. One more property in Mackinac Island there for you, $995,000. Again, if you're interested in any of these properties, be sure to leave me a DM, comment, leave something in the comment section. Email me at Brendan Ecker Realty at protonmail.com or Ecker Realty at proton.me, or you can visit BrendanEckerRealty.com and fill out one of the contact forms, book a consultation on the Calendly link, and we'll talk. We'll figure out your situation. And then the last property I want to look at for the day is this $25 million property. And I think this is what I'm all about. I'm a huge luxury guy. I think luxury is where it's at. I think we need more luxury. I get really excited about luxury real estate because there's just so much that we need to do, again, when it comes to luxury real estate. We just need to have these standards, again, in my opinion. This, to me, is what it's all about. Okay, so when we look at these properties, look at that. So you got 1, 2, 3 garages here. I'm sure you probably fit in like what? 2, 4, 6 cars maybe. So that's pretty cool. Got a nice roundabout driveway. Very, very for the rich, right? 25.5 mil, I think this was. We're going to look at that price again in a moment. Beautiful, though. Beautiful. Beautiful architecture. Beautiful landscaping. Right on the water. Got yourself your own little dock here for any boats that you own. So this is what I think is pretty awesome. Again, I'm a big luxury guy. I like to work with anybody who's interested in luxury real estate because I think we need to put our standards higher, right? We always need to be thinking big and what we can achieve as human beings. And this is like very grandeur. So when you look at that, you look at the nice tile floors here, and you look at the nice staircases, bended staircases, raised ceiling, all nice stuff. Beautiful windows, old-fashioned windows. Long hallway here. Pretty cool. Your own bowling alley. That's dope. And then you also have a bar, beautiful paintings and art in the corner. So again, a bar is huge, by the way. Everybody's asking about, I want a bar. I'm looking to have a bar. I want to have people over my house. I want to be social. I hear that all the time. So definitely something you want to think about. So very, very cool. Got your own basketball court in this place. Again, this is over $25 million for this property, but this is what you're paying for. Got your own basketball court. Host a whole reality TV show right in this place alone. Think about it. Got your own kitchen. Very, very nice kitchen. Commercial-looking kitchen. Movie theater, can't beat that. I'm a big movie guy myself as well. Flat screen, basically like a floating flat screen vibe here. So that's cool. Want it to bend your neck or hurt your neck. Cool stuff. Again, you got a nice little castle vibe here. Little wine cellar. This would be amazing. I think this would be really cool. So yeah, again, yes, this is kind of what we're looking at. So again, over $25 million for this estate. But this is where my clientele shine. They really want to focus on this. And this is kind of what they want to see. So again, a lot of the clients that are talking to me in Michigan, they want luxury real estate. Again, as much as people think times are hard when it comes to money, people are making money. This is in Orchard Lake Village, Michigan. This is 5400 Pontiac Trail. So $25 million for this property and this estate right here. So again, contact me if you want to hire me as your realtor. We'll get you hooked up with that and we'll get you started. So again, before we end with looking at properties, I wanted to finish off by looking at some commercial real estate as well. So if you didn't know about LoopNet, this is a great place for commercial real estate auctions. Okay, so if you want to make money on triple net properties, established businesses that are cash flowing already, then real estate and triple net is where you want to be. And that's where a lot of investors are going. So Auburn Hills, Michigan, Lansing, these are just two. So you have a premier office building in Auburn Hills, Michigan, and this is pretty awesome. Again, this is a lab space here. So again, not just offices. You also have a vacant industrial asset with strong upside, so you can turn this into a grocery store, storage center, anything you really want. But again, this has 20 days on the auction market. You also have 2 multifamily properties here. So you're looking for an apartment complex. This is how you get them, right? At the lowest rate possible. So again, you'll view the documents. You'll see that this is pretty much where you want to focus on finding those. Historical occupancy and stable NOI. So not operating, NOI stands for net operating income. Something very important you need to pay attention to when you're looking at commercial real estate, when you're looking at investment properties, anything that you can turn into a business, right? Or transform into a business or buy as a already cash flowing business, any of the sort. So this would be great for an office center, for if you own a real estate agency, you own an insurance company, a finance company, you own any kind of, even if you have some kind of museum, this would be great for that. Again, lots that you can turn this into, right? So lots of cool things. Ultimately, this is pretty sweet. So when we look at the living area here, or not living area, when you look at the office spaces here, again, put a lot of different offices here. It's in a pretty good location, 5 miles from the state capital and downtown. So again, this is in Lansing. So this is not the worst location. Again, if you're running any kind of business and you need space for employees, this is where you want to put it. Okay, and again, this is for your multifamily investors, people you want to buy an apartment complex. This is 9 miles to downtown Detroit via 94 and 75. 92% occupied cash flow investments. Starting bid is $250,000. So you'd be putting that down. And essentially for the price of pretty good cash flow. And so again, we'd have to look at the numbers. But if you're interested in that, I'll help walk you through this entire commercial process, and we'll go through the auction, and we'll do all of that together. I'll hold your hand, and I'll make sure that you're not getting screwed over. And not just me. I also have a very good team at Best Life & Co., and we're constantly working with real estate investors, and we have a lot of experience making sure that you guys are getting the best possible experience on your deal. Same thing with sellers, same kind of experience. So Best Life & Co., I have a lot of great people that I work with, and my own mentor myself. I'm very, very skilled, very prominent. So it's not just going to be just me. As a young 27-year-old realtor, I'm going to make sure that I'm walking you through everything. Warren Business Center, Premier Flex Asset. So again, this is in Warren, basically Detroit. Again, turn that into anything you want, really. Hey, turn it into a data center. You never know, right? A lot of people like data centers, a lot of people don't. It's kind of a 50-50 split. But you can turn this into a mall. You can turn this into you turn this into a movie theater. You can turn this into any kind of industrial place you want. Factory, whatever. Just got to keep your mind open. So lots of big stuff on LoopNet that you can always look at. So that's all the time we have left for today, pretty much. Again, I wanted to cover this last video by Graham Stephan, and that should fulfill the rest of this episode. So again, this is Graham Stephan. What the F is happening to the housing market? So again, in this video, Graham Stephan, if you don't know, he's a real estate agent himself. He's more of a California guy, more of a Florida guy. Does a lot of real estate investing with Ben Mala. But I follow his channel because I think he has a lot of good content, and he has lots of good insights into the real estate market. So again, this was 11 days ago, but still relevant to today. So what do you guys think about this? Let's react to this video.
What's up, guys? It's Graham here, and you better prepare for what's about to happen. Believe it or not, for the first time since the great financial crisis, the housing market is going through a total reset, except this time it could permanently change who gets to own a home and who gets locked out forever. That's because last week, Morgan Stanley warned that we're soon about to see a brand new housing market, where mortgage rates stay higher, affordability fails to recover, inventory remains locked, and prices never fall enough to save the average homebuyer. Meaning, the crash everyone's been waiting for might not ever happen, and by the time they realize it, the opportunity to buy might already be gone. That's why we really got to break down exactly what's happening, why the housing freeze could get significantly worse throughout the rest of the year, and then most importantly, me what this actually means for you. Because if Morgan Stanley is correct, the most dangerous phase of housing prices may have already begun. And the scariest part isn't what's happening today. Instead, it's what's happening next. Although before we start, if you appreciate me financially doom scrolling on your behalf, it would mean the world to me if you hit the like button or subscribed if you haven't done that already. Yes, I keep saying it in every video. Yes, it's annoying. Yes, it does actually help out the channel. And as a thank you for doing that though, here's a picture of a zebra. So thanks so much, and also big thank you to SoFi for sponsoring this video, but more on that later. All right, so there's a bit of a backstory. In terms of what's happening in 2026 and what Morgan Stanley predicts for the future, we need to talk about the current state of the housing market. And that all begins with the housing freeze. See, Morgan Stanley periodically releases their home price forecasts about twice a year based on their analysis of the data, trends, and prices. And their latest findings were rather surprising. Like in terms of their newest research, they no longer believe the housing market is breaking in the sense that we'll see a 2008 style crash, but rather the housing market's going to enter a brand new reset where prices just keep going higher and then just stay there. After all, as of now, the 30-year mortgage is almost at 6.5%, which surprisingly is already at a 7-week
low. The 30-year mortgage is almost at 6.5%. We covered that. And those top 10 different mortgage interest companies that can actually help you out. All the different comparisons. We covered that at the beginning of this live stream. But that's crazy. Mortgage rates fall to the lowest level since May, when here those prices are actually going up, in my opinion.
Meanwhile, the median home price just hit $429,000, which is up another 1.
And that's across the country, not just Michigan.
3% from a year ago. And to top it all off, housing affordability is not getting any better. In fact, it's only getting worse, all thanks to what Morgan Stanley is calling the lock-in effect. Look, it's no surprise, as of right now, roughly 70% of homeowners have a mortgage rate below 5%, and half have a mortgage rate below 4%. This means there's no incentive whatsoever for someone to give up their sub 4% mortgage and exchange it for one that's going to cost them 50% more, when they could just stay put instead. And that's exactly what's happening. Really, until rates drop back down, the housing market is frozen. Nobody wants to move. Housing can't be built fast enough to satisfy demand, and that means that everything else on the market keeps going up in price despite being unaffordable for the vast majority of people. In fact, housing turnover is now at the slowest it's been in 40 years, and this has remained completely unchanged for 11 straight quarters. That is why we have this weird paradox where demand is weak because homes are unaffordable, but supply is equally as weak because no one wants to give up their cheap mortgage. So the two just kind of cancel each other out. And instead of a crash, home prices just keep going up higher, where most people patiently wait for prices to drop. But unfortunately, that's not expected to happen anytime soon, all because of something that most people don't expect, and that would be the affordability trap.
Prior to implementing Buildertrend as our main project management software, we were a little bit small.
Believe it or not, a few days ago, Harvard just released their own warning about the recent housing price appreciation trend, and it basically just confirmed everyone's worst case scenario. That's the fact that the housing market is completely okay, no, in all seriousness, even though Morgan Stanley is warning that the housing market is resetting financially, Harvard's research suggests something a lot deeper, which is that the current state of the housing market that most Americans grew up believing may have only been a one-time exception and not the rule, and that home prices were only ever designed to keep getting more expensive and more expensive and more expensive. Why? Well, just keep in mind that when all of this started after World War II, you had 16 million veterans all coming back at the exact same time. And Washington was genuinely terrified. So how do you quietly reabsorb so many people back into quiet, stable, civilian life without things getting out of control? Well, you guessed it. The answer with this was to give them a house. The conditions, after all, were perfect. You had cheap land, cheap debt, massive government support, fast construction, rising wages, and millions of people coming home who needed jobs, families, and stability. So the solution to this was what's known as the GI Bill. With this, veterans could buy homes with little to no money down, with low interest rate debt, and federally backed by the U.S. government. Well, at the same time, the country was building suburbs, roads, schools, businesses, and entire communities around that new way of life to prevent the country from falling into disrepair. And it worked. As we've all seen, millions of people bought houses, started families, and adjusted to civilian life. But unfortunately, those conditions only lasted for a few decades. And today we have the exact opposite. Mortgage rates are higher, construction is slower, zoning is tighter, insurance is more expensive, wages have not kept up with prices, and instead of houses becoming easier to access over time, it's becoming...
Real estate is an insane market today, and you have to be so careful. That's why I'm making this live stream, because as a realtor myself, I'm licensed to give this kind of advice. I'm licensed to advise you as much as I possibly can on the current real estate markets in Michigan and what is the proper course of action. So again, if you're looking to really grow in real estate, you need to work with somebody who is an expert, who works with experts every day. That is what we do. So again, be sure to contact me, shoot a DM or DM home in the comments section. And again, email me at brendaneckerrealty@protonmail.com or eckerrealty@proton.me. Or again, visit brendaneckerrealty.com. Again, fill out the contact form, because you need to work with somebody who knows what they're talking about. You need to work with somebody who's actually going to be able to help you when it comes to this crazy, crazy market. We have an Iran war going on. And again, I cover a lot of the Iran war and the geopolitics happening. I cover that on Ecker Geopolitics, on Rumble. I talk about that. But on this show, we talk about real estate. And so I can't stress it enough. During times of war, like Stephan is saying, you need to be careful. Everybody is in this lock-in effect where they don't want to sell or they don't want to buy, because it doesn't make sense with where the current mortgage rates are. My opinion, I think there's never a bad time to buy real estate. I think it's always going to be too late the longer you wait. And so, because of those things, you need to just use best practices. And again, find those best realtors like myself. And again, Michigan, this is where I can help you out. So again, be sure to contact me. If you are looking to invest, it's never a bad time to invest, but it's always a good time to know what's going on. And that's what this channel is for. So also be sure to like, share, comment, and subscribe.
More dependent on whether or not your family already owns those assets to begin with. That's why Harvard's warning is so important, because homeownership is starting to behave less like something people earn through income and more like something passed down through inheritance. And if that's true, Morgan Stanley's reset isn't just about rates, prices, and inventory. It could be that our entire housing market is shifting from those who are able to work their way in to a system where you already have the help, already own, or you're forced just to fall further and further behind. So in terms of what this means for the next few years, when prices might actually begin to come back down, and then most importantly, what you could do about this, here's what you came for. Because what they're predicting is pretty much the exact opposite of what most people expect. Although before we go into that, even though investing could be a great way to build long-term wealth, most people don't realize that their checking and savings.
So again, what I think about this also, I think AI is going to be like a huge impact in the future. I think AI is going to change the game for a lot of things, not just in real estate, for the entire world. So real estate is going to help you gain a lot of different access to all of these massive different opportunities in the real estate game. So I think AI is going to be a big factor into that. It's going to change the entire U.S. economy. Cryptocurrency, that's going to be huge in the future. So again, I think that's going to end up affecting people's ability to buy houses, and it will probably help in the long run. So we'll see what happens. We also are waiting on the Clarity Act for crypto, but with crypto and AI, I think people are going to be able to buy houses pretty soon here. And I think that's the plan, to rebalance and refinance all the debt in this country and to do all of that to allow you to basically get into a house if you're a Zoomer and not just a Boomer.
This is possible. So all you got to do is head to SoFi.com/. So in terms of the overall housing market, what this means for you, and then what's most likely going to happen next, there is one more part of Morgan Stanley's housing report that most people don't want to hear, and that would be the new normal. Look, in terms of Morgan Stanley's research, their message is pretty straightforward. Stop waiting for housing to become more affordable, because realistically, it's just not going to happen. Now, that does not mean that you should go buy anything at any price or put yourself in a payment you can't afford, but it does mean that they think you shouldn't be waiting on the sidelines for affordability to come back, for prices to drop 30%,
yes, exactly what I've been saying,
to fall back down to 3%, because realistically, that's just not going to happen in a very long time, if not ever. That's why instead, their advice is a lot more practical. They say that you should buy when the numbers make sense for you on a monthly payment that is affordable, when you're not waiting for a crash once you've already built up an emergency fund.
Yeah, so everything depends on your financial situation. What is your credit score, right? Is your credit score at least above 750, I would say. I mean, that's what you kind of need. That will kind of get you pretty good terms on a loan. Do you have money to put down on a property? At least I would say 50 to 60,000 for a single family residential. If you're looking for a multifamily investment, I would say about 150,000 to 250,000 you should have in cash ready to put down on the table, right? These are the numbers that you need to have. Also, do you have 2 years of employment history, or do you have at least 2 years of college experience in a certain field with a current job that matches that college degree? Because your college experience also counts as a basically job experience, because that's what you're going to college for. So lenders will also approve that as work experience. A lot of people don't know that. So again, credit score, work history, cash on hand, basically what your liquid assets, what you're able to put into the real estate property. And then again, what is your financial situation in its entirety? What is your debt to income ratio? How much debt do you have in the bank, right? How much debt do you have currently as opposed to the income that you're making? So those 4 things are going to be the most important factors to getting into a real estate property. A lot of people don't understand. If you have those 4 things all in line, then you're probably in a good position to start talking to a realtor. We hook you up, and then again, or really you get approved by a mortgage lender first. And then once you get approved by a mortgage lender, you'll have 45 days to go find a property. You'll work with somebody like me. I'm a realtor, and I'll help you find that property, and we'll get you into a home. And so ultimately, that's the idea. If you're selling the home, then same kind of deal, just kind of the reverse opposite there. So again, that's kind of what we're looking at.
In other words, don't buy because you're afraid of missing out, but don't wait forever on conditions that will probably never happen again. It's for this reason that they have 5 predictions for the future, with the first being number 1, prices stay high. In their view, housing is basically stuck. Prices don't collapse because there's not enough supply and homeowners aren't stressed enough to sell. But at the same time, prices don't skyrocket either because affordability is already constrained and people could barely afford it as it is. That's why their base case is simply more of the same, leading to number 2, the new equilibrium. With this, the housing market's reset to a world where everything costs more and people just have to get used to it. And after a while, a 5.5% mortgage might soon start to feel cheap compared to 6.5%, or a $2,500 mortgage payment might soon be cheap compared to $3,000. You get the idea. The buyers who are waiting for things to return to normal might just have to come to terms that normal that previously existed is just never never coming back. Like if rates fall, buyers rush back in, demand increases, and that supports price. But if rates rise, then buyers disappear, inventory gets constrained, and the market freezes again. So either way, it's a tough situation to be in. That is why we have number 3, increased rentals. If Morgan Stanley's forecast plays out exactly as they anticipate, then rentals are really going to see an increase in demand, because if people are locked out from buying, they're going to have to live somewhere. And that means demand shifts towards apartments, built-to-rent communities, and landlords who already own the inventory on the market.
Yep.
And that, of course...
Yeah, this is exactly why I showed you apartment complexes about 20 minutes ago. We showed you an apartment complex here in Michigan on the St. Clair Shores. That's why. Because, again, Stephan is right. So is Morgan Stanley, that people are moving more towards a renter's economy. People will need to be renting into apartments and, playing that short-term, that temporary renting game. And so, again, and if you're a landlord, on the opposite side of that foot, you'll also need to think about, hey, what are the advantages to owning multifamily properties? Why that's also a positive thing. If we are going into a renter's market where people need to be getting apartments, guess what that means? Vacancies are going to go up, and that means that cash flow goes up. So if you're a landlord, this is good for you on the other side of this too.
And number 4, the supply problem. In this case, even if affordability improves, it doesn't fix the root problem, because it's not just rates. It's also permitting, zoning, insurance, construction, labor cost, land prices. It's the fact that millions of people want homes at the same time that millions of people refuse to sell them. Even the one thing that everyone's waiting for, lower rates, could be the one thing that causes more people to flood into the market, causing prices to go even higher. And that's why we also have number 5, the chain reaction. The reality is, this doesn't just stop with housing prices. It also affects the entire economy, because when someone buys a house, they also spend money on furniture, appliances, renovations, landscaping, moving services, insurance. And when all of that freezes, then everything else slows down. Like people spend less, they switch jobs less frequently, they don't start families, and everyone else as a whole starts falling behind. However, in fairness, not everyone agrees, and some analysts have a completely different point of view. So in terms of what's most likely going to happen next, what they say, and then most importantly, what you could do about all this, we need to talk about the housing reset. Overall, in terms of this next year, Zillow's latest forecast actually calls for a very slight decline in some areas, like California, Florida, and Texas, which are already price constrained, while other markets on the East Coast could see prices continue going higher, purely because they're starting off from a lower basis. Realtor.com also somewhat agrees with this, noting that they don't see any major price correction in the future, but rather long-term, they expect the typical house would be on pace to reach $1 million by the time millennials reach retirement age in about 25 years. And the most extreme, we have CoreLogic, who anticipates that year over year, home prices are going to nationally increase by another 5.1% from all the pent-up demand. In fact, they say that the market activity is increasingly limited to those with enough equity or cash to ignore mortgage rates, which only widen the gap for those trying to get their foot in the door. However, in terms of the largest pool of data, the lender Fannie Mae just revealed their 3 most likely scenarios. And in terms of prices, they expect in a worst-case scenario that home values rise 5.3% through 2030, with a big...
So again, people telling you that real estate's it's not a good time to buy real estate, well, it's also a good time to buy real estate, because if you're an investor and if you're looking at what we're looking at here, how all of this is, how the prices on homes are going to go up, the real estate market looks to be going strong for people who are in the real estate game to be landlords and on that side of things. So this is why I'm such an advocate of not just becoming a renter and paying money to a landlord, but to become a landlord and to find a way to make a lot of money, enough money really, so that you can basically put that down on a multifamily investment property or build one. All of these things can be done. And so although it's more difficult today, again, the real estate market, I think, is going to be very powerful over the next decade, right? At this current rate, according to the data.
Base case of 13.6% and an optimistic case of 21.6%. Even though short-term, the Mortgage Bankers Association expects prices to remain fairly flat for the foreseeable future. That's why the general consensus seems to be that we should all expect 2026 and 2027 to be a lot more of the same. We're talking sluggish sales, prices stay flat or increase 1 to 3% depending on the area, and then when interest rates do eventually come back down, we might begin to see some more activity, but that could also push prices up even higher. That's why long-term, home prices are expected to regain their average 1 to 3% a year, while mortgage rates tend to settle around 5%. Although keep in mind, just because home prices are going higher in dollar terms doesn't mean that they're going higher in terms of value. Like even if a home goes up 3% in a year, if inflation is 5%, then you actually lost 2% in terms of value. And that's something everyone should keep in mind. In fact, some economists believe that we might not see a housing crash, but we could very well see inflation eating away at the appreciation of properties to the point where eventually incomes catch up and everything balances out. Or at least that's the hope. So in terms of what I actually think about this, and then most importantly, what you could do about all this, starting today to give yourself the best chance possible of coming out ahead, here is what you came for. Overall, I tend to think that Morgan Stanley and Harvard are correct. Really, from all the research that's out there, unless we see a massive economic depression that wipes everybody out that no one sees coming, it's unlikely that housing prices are going to be crashing anytime soon. Instead, the market is just quietly resetting to a much higher and much more expensive new normal. And everyone who's waiting it out to see 2019 prices again is unfortunately probably out of luck. But that doesn't mean that everyone should just give up. So in terms of how to approach this going forward, number 1, don't wait for a housing crash. Now that's not to say that markets can't dip, because some markets absolutely will fall in price. But it is to say that you shouldn't be waiting for a 30% crash that'll probably never happen. Instead, if the numbers work for you today on a home that you could comfortably afford, even if your income drops, that you intend on keeping for at least 7 to 10 years, and the numbers work out in your favor, then by all means, do it. Number 2, you should refinance if rates drop. Again, if you buy something today that you could genuinely afford, and rates do eventually drop, and you could refinance to save some money, great, by all means, go for it.
100%.
But don't expect this to happen, because as we've all seen, rates have stayed significantly higher for much longer than people have expected. That then leads to number 3, there's absolutely no shame in renting. Realistically, if you could rent the exact same house for much less than it would cost you to buy it, and you could invest the difference, I just tend to think that's the smarter move right now. The way I see it, renting is not throwing away money when it's costing you less than what it would cost to buy without tying up your down payment in a liquid asset. In a lot of markets, renting just makes significantly more sense. Even if society says, oh, you should be buying a house, just make sure to run your own numbers and not the ones that worked for your uncle back in 1994. After all, for decades, we've all been told that buying a house is the single best way to build wealth long term, that everyone needs to do it. But as Harvard explains, that was built and designed around a very specific moment that no longer exists anymore. And today, homeownership is not necessarily a requirement for building wealth long term. So whether you buy a house this year, rent for the next 5, or just keep saving for the next 10 years, just make sure you don't get dragged down by the noise, make sure to run the numbers, and no matter what, always hit the like button and subscribe if you haven't done that already. So with that said, thank you so much for watching, and as always, if you want bonus content as well as members-only videos, including members' financial...
So yeah, be sure to subscribe to Graham Stephan's YouTube channel. I will be covering a lot of his YouTube episodes on this live stream. And again, subscribe to Michigan Real Estate Live on YouTube. We're going to be streaming there a lot of the time when it comes to the future. And again, Brendan Ecker, this main channel will be our kind of backup for that. We'll always be posting we'll always be uploading the live streams from that channel. That's a new channel, Michigan Real Estate Live. And again, follow us on Spotify, follow us on Rumble. You can watch on Rumble, you can watch on Kick, you can watch on Twitch. But this is where we're at. And so what do you think about the current real estate market today? What do you think about everything, right? So if you're looking to invest in Michigan real estate, be sure to contact me. Shoot me a DM in the comment section, home, and I will be able to get in touch with you. And we'll talk about your situation. Email me at brendaneckerrealty@protonmail.com or eckerrealty@protonme.com or visit www.brendaneckerrealty.com. Again, this is what you need to be focusing on. Okay, you need to be focusing on real estate. Like Graham Stephan said, it's never a bad time to invest in real estate. Don't wait for the prices to drop because the smart investors are getting in and finding deals when they can, right? They're house hacking. They're doing anything they can. They're becoming landlords, investing in single-family residential properties. Figure out a way to adapt to the current crazy market that we're living in. That would be my advice as a real estate agent. As a Michigan real estate agent, I would tell you that's what you need to be thinking about. How do you get your credit score up to 850, right? You want a perfect credit score. How do you get a perfect debt to income ratio? Make sure the debt's paid off as much as you possibly can. Or you utilize business debt. That's a different kind of debt. Or again, another important thing of this is you need to have 2 years employment history or some college experience with a few months of job experience, right? But you want a college graduated experience with some work experience in there too in the same field, and that will count towards work experience. And then lastly, you want to have, like, I would say anywhere minimum $50,000 to $60,000 for a single family residential, and then you're going to want like anywhere from probably $150,000 to $250,000 minimum for those triple N leases, commercial real estate, multifamily properties. That's like the least amount. I mean, really, for a commercial property, for a triple net, you're really gonna want something in the millions, right? You're gonna want lots of capital. So again, if you want to navigate this entire market, then work with me, brendaneckerrealty.com. And that's all we have time for today. We'll be back tomorrow. We're gonna react to Ben Mala and what he's saying and his entire his last episode he released, and maybe we'll even cover that 2-hour podcast he did with Graham Stephan. So again, be sure to work with me, Brendan Ecker, eXp Realty, Best Life & Co. in Romeo, Michigan, and Royal Oak, Michigan. We will hook you up in Macomb County, Lapeer County, hook you up in Oatland County, Macomb County, Lapeer County, Washtenaw County, really anywhere in the thumb of Michigan. And I can hook you up, and we'll make sure that you have everything you need to go. We'll figure out your financial situation. We'll sit down, again, book a consultation on brendaneckerrealty.com. And again, like, share, comment, and subscribe. We're going to be talking about the news, the markets, and everything you need to know as a real estate investor, not just in Michigan, but really investing everywhere. We cover everything and how it all connects. And then, of course, if you're a Michigander, how it works for you. So without further ado, see you next time. Share and stay prudent, stay powerful, and stay wealthy.